People ask me all the time what I added to my life after 50 that made the difference. They want to know the secret strategy I discovered, the new investment framework I invented, the breakthrough insight that changed everything. And I always smile at that question because they are asking the wrong question entirely. The most important thing I ever did was not something I added. It was something I stopped. 7 things, actually. And the day I stopped doing them was the day everything I had spent 30 years building started to compound at a speed that still surprises me when I look at the numbers. Now I want to be precise about something before we begin. When I say my life exploded after 50, I am not speaking loosely, I'm speaking mathematically. At 50 years old, I was worth approximately $300 million. That sounds like a lot, and by any ordinary measure, it is. But here is the truth that most people do not know. 99% of my net worth was accumulated after my 50th birthday. 99%, let that land for a moment. 30 years of work, 30 years of discipline, 30 years of reading and thinking and calculating and waiting. And it produced $300 million. That I quit 7 things. And the remaining 1% of my life produced the other 99% of everything I've ever built. So no, we are not talking about what to add today. We are talking about what to remove. Because the enemy of your compounding is not out there in the market or the economy or the interest rate cycle. The enemy is in here, in the habits, the behaviors, the reflexes, the social programs that are quietly bleeding your potential every single day. 7 of them specifically. 7 things I quit doing at 50 that I wish, with everything in me I had, quit at 30. Pay very close attention. Let us begin. Kex. The first thing I quit was trying to be right about everything. I call this the correction addiction. And it is far more expensive than people realize. Here is what I mean. For most of my early career, I had a deep psychological need to be right. Not just in my investments. In conversations at dinner tables and boardrooms, in interviews, and the small moments where someone said something I knew was factually incorrect, I felt this compulsion, this almost physical pull to correct it. To demonstrate that I had the better information, the sharper analysis, the more accurate model. And for years I told myself this was a virtue. I was rigorous, I was precise, I was committed to truth. But here's what I was not doing while I was busy being right. I was not listening. I was not learning anything from the person across the table. I was not building the kind of trust and warmth and genuine human connection that I would later understand as the only real currency that matters at the end of a life. Charlie Munger sat me down once and he said, "Warren, the best thing you can do in a conversation is make the other person feel like the most intelligent individual in the room." And I thought about that for a long time, because Charlie is one of the sharpest minds I have ever encountered in my 70-plus years of doing this. And yet, if you sat across from Charlie at a table, you would walk away feeling like a genius. Not because Charlie was performing humility, but because Charlie genuinely understood that being right is almost never worth the cost of making someone feel wrong. Think about the math of this for a moment. In any given conversation, the probability that you are completely right and the other person is completely wrong is quite low. Humans are complex and partial and context dependent, but even if you are right, even if you are 100% factually correct, what do you gain by announcing it? You gain momentary satisfaction. A small neurochemical reward, a tiny dopamine hit that lasts maybe 30 seconds. And what do you lose? You lose the relationship a little. You lose their openness to you. You install a small defensive wall between yourself and that person, and in business and in life, every wall you build around other people is a wall you build around your own opportunities. I spent the first 50 years of my life being right, and I have spent the years since being useful. Your assignment for this first thing is simple but uncomfortable. For the next 7 days, I want you to catch yourself in the moment before you correct someone. Not after, before. And I want you to ask a single question. Does being right here cost me more than it gives me? 9 times out of 10, the answer will be yes. Let the small ones go. The second thing I quit was saying yes out of obligation. I call this the politeness tax, and it is one of the most quietly devastating financial and psychological errors that intelligent people make. Here's the scene I want you to picture. A young man comes to my office. He is enthusiastic, well-prepared, clearly intelligent. He has a business idea, an investment opportunity, a project he wants help with, and it is not bad. It is actually not bad at all, but it is not great. And more importantly, it is not within the small, precise circle of things I do extraordinarily well. In my early career, I would have said yes to that meeting. I would have said yes to that follow-up call. I would have said yes to that follow-up call. I would have said yes to the introduction he asked. For at the end, because I was raised, like most of you, to be polite, to be generous with my time, to not disappoint people who had worked hard and traveled far and clearly needed help. And here is what that yes cost me. It cost me the hour I could have spent reading the annual report of a company which returned 40 times my investment. It cost me the mental bandwidth that belongs to the 3 or 4 decisions per year that actually move the needle on everything I have built. It cost me the most precious, non-renewable resource in the universe, my attention. Warren Buffett's calendar is the most valuable document I own, not my portfolio statements, not my balance sheet, my calendar, because time is the one asset that cannot be compounded. You can compound money, you can compound knowledge, you can compound reputation, but you cannot get back a single hour, not one. And I was handing them out like candy at Halloween. The most successful people I have known in business share one counterintuitive trait. They are remarkably comfortable disappointing people in the short term. Not because they are cold or selfish, but because they understand with mathematical certainty that their best work, their most generative, most valuable contribution to the world requires a level of focus that is simply incompatible with an open-door policy. I have a simple rule that I adopted around my 50th year, and I have never violated it since if it is not a clear yes, it is a clear no, not a maybe, not a let me. Think about it, not. I will try to fit it in. A clear no delivered quickly and warmly, because a slow maybe is the cruelest thing you can give a person who needs an answer. Your assignment here is this. Look at your calendar right now. Not tomorrow. Right now. Find 3 commitments in the next 30 days that you said yes to out of politeness or obligation or social pressure. 3 things that, if you are completely honest, are not aligned with your highest use of your own time, and cancel them. Today, the discomfort you feel doing that is the sound of your operating system being reprogrammed, a sever. The 3rd thing I quit was trying to fix my weaknesses. I call this the deficit obsession, and it is one of the most thoroughly embedded lies in the entire education system. From the time you are a child, you are handed a report card, and what does everyone look? At first, not the A's, the C's and D's, the gaps, the failures, the places where you fell short of the standard. And from that moment forward, most people spend their entire lives in a desperate, grinding campaign to drag their weaknesses up to average, to be mediocre at everything rather than extraordinary, at 1 or 2 things. And I understand why the system is built this way. A well-rounded worker is easier to deploy. A person with no glaring deficiencies is lower risk for an institution. But you are not building an institution's workforce. You are building a life. And in a life, the returns do not come from eliminating weakness. They come from maximizing strengths to a level that makes your weaknesses irrelevant. Let me give you the most concrete example I know. I cannot cold call. I am genuinely terrible at it. In my 20s, I took a Dale Carnegie public speaking course, not because I wanted to, but because the thought of standing in front of a room made me physically ill. I nearly dropped out of Columbia Business School to avoid a public speaking requirement. I am also not a particularly natural leader. In the military sense, I do not inspire troops with rousing speeches. I do not manage large organizations. Well, I am not good at firing people. I am not good at operational detail. In short, if you gave me a standard management assessment at age 30, you would have found a fairly alarming number of significant gaps. But here's what I can do. I can read a financial statement the way a musician reads sheet music. I can hold a mental model of a business and its competitive dynamics with a clarity and patience that I have never seen matched. I can wait. I can sit on my hands for 3 years while the market screams at me to do something and feel completely calm doing it. And at 50 years old, I made a decision. I am going to stop pretending I can be something I am not. I am going to find people who are extraordinary at the things I am merely ordinary at. And I am going to go so deep into the things I am already extraordinary at that nobody alive can compete with me in that narrow lane. That is, the game, not the broad game, the narrow game. Your assignment is this. Take a piece of paper and draw a line down the middle. On the left side, write 3 things you are genuinely in the top 10% of the world at, or could be with focused work. On the right side, write 3 things you are persistently mediocre at despite years of effort. Now here's the instruction that will feel wrong. Stop working on the right column entirely. Find people who are extraordinary at those things and pay them or partner with them. And pour every remaining hour into the left column until the gap between you and second place is embarrassing. Shh. The fourth thing I quit was consuming the news. I want to be very careful how I say this because it is frequently misunderstood. I did not quit staying informed. I quit the addiction to the daily narrative of crisis and urgency that the news industry sells as a product. And understanding the difference between those two things took me an embarrassingly long time. Here is how the machine works. The human brain evolved over 200,000 years to pay extraordinary attention to threats, a rustle in the tall grass, a change in the behavior of the tribe, an unexpected noise in the dark. These things demanded immediate attention because ignoring them could kill you. The news industry did not create this instinct, but it discovered it. And it discovered that if you can trigger this threat detection system in the human brain, you can sell advertising against the eyeballs it captures. So the entire architecture of modern news is built not to inform you, but to keep you in a low-level state of threat activation 24 hours a day because a calm brain changes the channel. An anxious brain keeps watching. Now, here is the investment implication that most people completely miss. In 50 years of watching markets, I have never once made a better investment decision because of something I read in a newspaper that morning. Not once, in fact, nearly every catastrophic mistake I have either made or watched other people make traces back to an emotional reaction to a news event. The news told people to buy technology stocks in 1999. The news told people to sell everything in March of 2009. The news told people that Coca-Cola was finished when New Coke launched in 1985. Every single one of those news-driven decisions was wrong, and the investors are turned off the noise and looked only at the underlying businesses, and their long-term earnings power made fortunes while the news watchers destroyed theirs. I read annual reports. I read industry analyses. I read history. I read biographies of people who have successfully navigated situations similar to the ones I'm currently facing. I do not read what happened yesterday in the market, because what happened yesterday in the market is almost never relevant to what will happen over the next 10 years in the business I am evaluating. Your assignment is a 30-day experiment. For 30 days, you are going to consume 0 daily financial news. No CNBC, no Bloomberg, no financial Twitter, no stock market podcast. If something is genuinely important enough to affect a long-term investment thesis, it will still be there in a quarterly review. And at the end of 30 days, you will compare your decisions in that period to your decisions in the 30 days before. I will wager you every dollar I've ever made that your thinking will be cleaner, your decisions will be slower and more deliberate, and your results will be better. The fifth thing I quit was keeping people in my life who drain my energy. I call this the social gravity problem, and it is the single most underestimated force acting on your trajectory as a human being. Here is the physics of it. You cannot spend significant time with people who are operating at a lower altitude than the life you're trying to build without being pulled toward their altitude. This is not a moral judgment. It is biology. Mirror neurons are one of the most powerful discoveries in modern neuroscience. Your brain literally mirrors the emotional and behavioral states of the people around you. You absorb their anxiety, or their calm, their scarcity, or their abundance, their sense of what is possible and what is not. You do not choose to do this. Your brain does it automatically beneath the level of conscious thought, which means the most consequential decision you make every single day is not your investment strategy. It is who you have breakfast with. I made a brutal audit of my relationships at around age 50, and I found a category of person in my life that I had been carrying for years out of loyalty or habit or a misguided sense of obligation. I call them the energy vampires. And I want to be precise about what I mean. I do not mean difficult people. Difficult people who challenge you, who push back, who disagree with you, can be among the most valuable relationships in your life. Charlie Munger has disagreed with me more times than I can count, and every disagreement made me sharper. I mean the people who, after every interaction, leave you feeling slightly smaller, slightly more exhausted, slightly less certain about your own judgment and direction. The ones who greet every plan with a reason it will not work. The ones who interpret every success you have as a personal threat to their own self-image. The ones who have been talking about what they are going to do for so long that the talking has become a substitute for the doing. Those people are not bad people, but they are expensive people. And at 50 years old, I made a decision I should have made 20 years earlier. I began spending my hours with people who were building things I admired, people who were smarter than me in specific important ways, people who made me feel energized and challenged and slightly inadequate in a productive way after every conversation. And within 5 years, my thinking had changed more than it had in the previous 20. Your assignment here is the hardest one I am going to give you today. Write down the 5 people you spend the most time with. Then, next to each name, write one word that describes how you consistently feel after spending time with them. If more than 2 of those words are negative or draining, you have a problem that no investment strategy can solve. Tough. The 6th thing I quit was making decisions under time pressure. I call this the urgency illusion, and it is one of the most effective weapons that bad deals use against good judgment. Here's the scene. You are in a negotiation, or an investment opportunity, or a business decision. And the other side says we need an answer by Friday, or the price goes up on Monday, or this window closes at the end of the quarter. And something in your brain shifts. Moves from what is the right decision to how do I decide in time, and the moment that shift happens, you have already lost. Because almost nothing in business that is genuinely good requires an immediate decision. The best investments I have ever made were ones I had been watching for years before I ever wrote a check. Coca-Cola I studied for more than a decade before I made it one of my largest positions. G. Heiko I first encountered as a young man in my 20s, and I bought a meaningful position decades later. The Washington Post I understood as a business long before the price was right. In each case there was no urgency. There was patience. And patience is not the absence of action. Patience is the act of waiting until the situation is so clear and the price is so favorable that the decision becomes almost automatic. The urgency that other people try to create around deals is almost never real. It is almost always a sales technique designed to prevent you from thinking clearly. A technique designed to bypass the slow, deliberate reasoning brain and activate the fast, reactive, emotional brain that makes decisions based on fear of missing out, rather than analysis of what is actually in front of you. I have a rule. Any deal that requires a quick decision is not a deal for me, because my edge as an investor is not speed. My edge is patience and clarity and the ability to wait until the math is so obvious that a child could see it. Your assignment is to build what I call the 48-hour fortress. For any decision involving more than $5,000 or any significant commitment of your time or reputation, you will not decide for 48 hours. Will not tell the other party you need 48 hours. If they withdraw the offer because of that, you have learned everything you need to know about the quality of that deal. Sempen. The 7th and final thing I quit was measuring my life against other people's lives. I call this the outer scorecard problem, and it is the deepest and most corrosive of everything I have described. Today, here is the test I use. Would you rather be considered the best lover in the world and know privately that you are the worst? Or would you rather know privately that you are the best lover in the world and be considered the worst? How you answer that question tells you whether you are running your life on an inner scorecard or an outer scorecard. And I want to tell you something I do not say publicly very often. For the first 40 years of my life, I was running almost entirely on an outer scorecard. I wanted the recognition, I wanted the validation, I wanted people in Omaha and on Wall Street and in the pages of financial publications to look at my results and confirm that I was right, that I was smart, that the way I saw the world was correct, and it worked, in the sense that I got the external confirmation I was seeking. But here is what I understand now that I could not see then. Outer scorecard is a trap. It is a trap because it makes your sense of self dependent on variables you do not control. Markets can turn against you for years at a time. People whose opinion you value can be wrong about you. Journalists can misunderstand your philosophy. Competitors can have banner years that make your solid years look mediocre by comparison. And if your self-worth lives in those external measures, then every market downturn is not just a financial event. It is an identity crisis. When I shifted to the inner scorecard around my 50th year, everything changed. The inner scorecard asks a different question. Not am I beating the market this year, but am I making decisions that the person I want to be would make? Not am I richer than my neighbor, but am I deploying my capital and my time in a way that reflects my actual values? Not do people think I am smart, but am I thinking clearly? And here is the paradox that will seem strange until you live it. The moment I stopped caring about the external score, my external results accelerated because decisions made from internal clarity are almost always better than decisions made from external pressure. You stop chasing the deal that sounds impressive and start waiting for the deal that makes sense. You stop buying the thing that signals success and start building the asset that creates it. You stop talking about what you are going to do and you go quietly into a room and you do it. Pa-pa-pa. Now, I want to tell you something before we close. I have sat at the bedsides of wealthy men at the end of their lives, men who had built empires, men whose names were on buildings and foundations and endowments, men who had achieved by any external measure everything that our culture tells us constitutes a successful life. And I want to tell you what almost every one of them said in those final hours. They did not talk about the deals they made. They did not talk about the quarters they beat, or the companies they built, or the net worth they accumulated. They talked about their children and whether those children truly knew them. They talked about the friendships they had let atrophy in the relentless pursuit of the next thing. They talked about the mornings they had missed and the dinners they had skipped and the ordinary moments of ordinary life that had slipped through their fingers while they were busy being important. One man I knew who had accumulated more than $1 billion in real terms told me near the end, "Warren, I got the math right. And the life wrong, I got the math right. And the life wrong, I have never forgotten those words. Because money is not the goal. Money is the magnifier. It makes the happy man freer and the empty man emptier. And the 7 things I quit at 50 were not just investment strategies. They were an attempt to get the life right, to strip away the behaviors that were producing noise instead of signal, distraction instead of depth approval, instead of integrity. And here is what I want you to understand about this moment. You may be 30 years old sitting somewhere watching this, thinking you have time, and you do. You have far more time than I had when I finally figured this out. But time is the one thing you cannot recover once it is gone. The mathematician in me wants you to understand that the cost of waiting even 5 years to quit these 7 things is not 5 years of lost growth, it is 50 years. Because of compounding, because the seed you plant today grows exponentially, and the seed you fail to plant today leaves an exponential gap that widens every single year for the rest of your life. Oops. So let me close with the 7 things one final time. You quit trying to be right about everything. You quit saying yes out of obligation. You quit trying to fix your weaknesses. You quit consuming the daily noise disguised as news. You quit keeping people in your life who drain your energy. You quit making decisions under artificial time pressure. And you quit measuring your life against anyone else's life. 7 things removed. 7 sources of drag eliminated. 7 chains cut. Do not let this be another video you watched and nodded it and moved on from information. Without action is useless. Wisdom without execution is vanity. The rocking chair comes for all of us. The only question is what you will be thinking about when it does. Now get to work. That's all. Thanks for watching.